system is a piece of software that runs on Thinkorswim, and it tracks institutional money flow. This is really a critical thing, very, very critical, because to be consistently profitable, you want to be trading with the institutions. And when they're not in a trade, you don't want to be in there with them. So we're going to talk about that, and we're going to show how the SPY Super System software will let you know or find out what those situations are all day long. All right, and again, I also have an alert service, the Compass Alert Service. It's a text alert service. Any trades that we take in the room that are going to be long enough. In other words, if they're going to be last for several hours or overnight or a week, I'll go ahead and alert on those. I don't alert on trades that are very quick, that are going to be 10, 15 minutes if they're like a trade that's very quick off of 5-minute charts. Don't expect to be in it a long time, because that's not fair to the alert service folks. But anybody in the room will get those. And any high probability trade that we're going to stay in for most of the day or overnight or a week, those will go out on the alert service. Okay. All right. Now, I go over this every time I do a webinar, and if you've been here, you maybe get sick of hearing about this, but this is so central to whether you're going to be able to be a consistently profitable trader or not. And to know what actually is creating trends in the market. The market is made up of many retail traders like this, these little marbles. This is me and you and most millions and millions of retail traders around the world. And when retail traders are in the market, in the institutions, which is this big marble, when retail traders are the majority of what's trading a particular stock, then you're not going to have a trend. We cannot generate a trend or reverse a trend. All we can do as retail traders, without institutions being in there, all we can do is generate a bunch of chop and chaos. That's exactly what you're going to get. So it's up to us to find a way to make it to know when the institutions are in the trades. And I mean, in the trades in a big way. They need to be pushing the trade in a specific direction. You can have institutions in a trade with some buying, some selling. It's not going to give you the push that you need. But the SPY Super System software will identify when the institutions are in there in force. Now, this are the institutions. And just so we're clear on what institutions are, most everybody knows their investment banks. Goldman Sachs, Morgan Stanley, JP Morgan. These are all big billions and billions of dollars to trade and invest, right? But institutions also are made up of pension funds, big pension funds, police pension funds, fire pension funds, state workers pension funds. There's billions of dollars in there. They're part of the institutions. And so is hedge funds. So are hedge funds. Hundreds and hundreds of hedge funds, again, with more billions of dollars to trade. And lastly, there will be mutual funds, T. Rowe Price, Vanguard, huge funds with, again, billions and billions of dollars. So this is what makes up institutions. And what we're trying to do here, and what we're attempting to do and doing it very successfully, is to identify when the institutions are in a trade and when they're not. And it's important to understand that institutions have a couple of different ways that they trade. They have trading desks where they actually have humans sitting at desks making trades. Very tiny percentage of the trades. Most of the trades they make are from what's called algos, computer programs that they have set up to look for specific criteria within the market, or they analyze news that comes out. They actually read the news that comes out, and they trade off the news. They trade off of setups on the chart. If you look at technical setups, they trade off of that. If you've ever seen a stock go right up to the 200-day moving average and then stop and then reverse back down again, that's the institutions. They know where the 200-day moving average is. And our job is basically to just follow the trades that the institutions are doing by using the indicators that they use and identifying when they're in there in force through our SPY Super System. All right, so that's what we're going to be looking to do, and this is really important to understand. This is a little bit off topic here, but I kind of like to throw this in here because people say, what is this slide doing here? This is a blackjack game. This is blackjack. These are chips, $100 chips, and ace jack of spades. What the heck has that got to do with trading? Well, is trading stocks and options gambling? And if you've ever told people that you're trying to become a trader, you probably get a lot of feedback from family and friends. It's just gambling. You can't win. You're going to hear a lot of that stuff. Okay. But when I was much younger, I actually made my living playing blackjack in casinos as a card counter. And there's a way to beat blackjack. It's harder now than it used to be back in the days when I was doing it, because it was mostly single and double deck. But the point was here that you could actually beat the game. And the way you beat the game is by keeping track of the cards, the low cards and high cards as they left the deck, right? So this gave me a mathematical edge over the casinos by knowing when the cards were in my favor. When they're in my favor, I bet big. When they were against me, I bet small. All right, so I was able to make a living doing that. And now it's gambling. People consider blackjack gambling, but here's a way you can beat it. And why I say this is because trading stocks and options is very similar in that. Without knowing what the institutions are doing, the trader has no edge. So in essence, they're gambling. You've got to have an edge. And this becomes, the SPY super system is, to me, this is our card counting system. This is what helps us identify when the institutions are in the trade and when we have an edge. That gives us an edge over the other traders, allowing us that's the ability to become consistently profitable. All right. And again, the SPY super system, in conjunction with identifying the best high probability trades, can lead to consistent profits. But the SPY super system software is the key to this. All right, because we're identifying when institutions are in there. Okay, so in the room and in the alert service, we have a couple of rules to trade by. First thing is we trade the best and skip the rest. It sounds simple. It's not real simple, but we only trade the best and we skip the rest. So this is the most important thing here. If you think about it, every trade that you don't take, that you might have taken, if you didn't realize that institutions weren't in the trade, it's likely to become a losing trade. If you can skip a losing trade, that's just as good as having a winning trade. So this is really important. We only trade the very best trade setups when the institutions are in the trade, and we skip everything else. So we're not taking a lot of trades. I don't take a lot of trades in the room. I don't take a lot of trades in the alert service. And our objective is not to make trades. Our objective is to make money. It sounds obvious, but it's not. For most traders, one of the biggest drawbacks to most retail traders, why they lose money, is they overtrade. And overtrading is because they get bored. They sitting in their computer. They feel like, I need to be in a trade. They want to be in a trade all the time. So their objective now is they're switching over to make trades, not to make money. And they justify this in 1,000 different ways. But if they know the trade isn't that good, but they're taking it, they'll justify it. And that's the big problem. So again, keep in mind, our objective is not to make trades. Our objective is to make money. All right, this is a big deal. All right, now maintaining discipline is very important. Now, maintaining discipline is, what I mean by that is learn and follow the process. This means we have specific criteria that we use for high probability trade setups, and I'm going to go over those in a second here. All right, but you only want to be trading those. So that's what discipline is. Stick to your strategy. Stick to the strategies that you know work. All right, and this is really critical, because I've known lots of traders. And if they have to take a couple of losses, they'll start looking around for another strategy they've never used before. They look at social media, they look at their emails. Some friend of theirs tells them about this great stock, how it's going to rip up. Just follow the discipline. We have strategies we know work. They work consistently 85, 90% of the time. You stick to those. So that's the process. We learn and follow the process and remain patient. And this is the hardest thing for most retail traders to do, is to basically sit on your hands. Yesterday was a day in the market where market gapped down and it chopped around all day long. It was very difficult to take any trades at all. It took very, very few. I think I took 2 trades all day. They were just intraday trades. But this is the hard thing to do, is remain patient. But it's in the room, a lot of times I'll tell folks, I use an expression called LPTE, low probability trading environment. When you're in a low probability trading environment, you want to trade less, obviously, very few trades. Small trades, take quick profits because the market's just chopping around. So being patient is critical. Wait for the stock to come to your level before you buy it. Okay, so as profitable traders, we need an edge. We need an edge over other retail traders, because that's who we're trading against. Our edges are, number one, the SPY super system software. This is critical. The software tells us when the institutions are in the trade. We've got to know this. Because if we don't know that, one of our main edges goes away. Then we're also going to trade relative strength and relative weakness. And this is a very highly overlooked criteria for most retail traders. Relative strength means this is not RSI. Don't think that this is RSI. Relative strength is, how is the stock that I'm looking at how is it trading right now on the 5-minute chart or on the daily chart? How is it trading relative to the S&P 500 or the SPY or the Qs? If the SPY is moving sideways and down and your stock is moving up, you're stacking green candles, you've got relative strength, and vice versa. Market's moving up or sideways and your stock's moving down, it's got relative weakness for a short, relative strength for a long. This increases your edge any time you take a trade, because if the market reverses and starts to go against you, you're not going to lose as quickly as the market is, because it had relative strength or relative weakness to start with. A really important distinction here, and something that is important to focus on. And then you want to trade with the market trend if there is one. A day like yesterday, we had no trend. There was a gap down and there was a bunch of chop. The market didn't go anywhere, so it's very hard to follow the trend. So on those kind of days, we've got to look for outstanding setups that the institutions are in. And last one here, number 4, buy near support and sell near resistance. Now this is a kind of really important, because if you're chasing a stock, this is meant to keep you from suffering from FOMO. When the stock is taking off in the morning and it's moving up quickly, a lot of traders will jump into that thing because they sit there and they're thinking, I'm losing money. This stock is ripping up. I got to get in this thing right now. It's way extended from any support level, but it gets them enticed to get in the trade. They grab it, and almost invariably it's gonna reverse back eventually, and you're gonna be caught near the top. What you need to do is wait for the stock to move up, come back to a support level such as the VWAP or the 15 EMA or the 8 EMA, a support or resistance level you got. Have it bounce off of that and go back into the original trend. That's where you get in, because you're getting in at a level where your losses are going to be very minimal. Because if it breaks down from there, from your support level, you're out and you haven't made a big loss. If you're chasing it up and you get in right near the top, now where do you get out? You got to wait for it to come all the way back to support. You're going to be looking at a pretty red P&L at that point. And selling the resistance is the opposite. This is obviously for a couple of things. If you're in a long trade and it's bumping up against resistance, take profits. If you're trying to get into a short trade, you wait till the stock moves up to resistance, turns around and head back down again. Okay, so those are the keys here. Now the compass system, which used to be called the compass system, it's actually the SPY super system now. But the original system, what this does is identifies the highest probability trade setups, while sidestepping setups that look good but will fail more often than they succeed. All right, and this is a big difference, because when I bought the compass system back several years ago, when I just discovered it, my win rate went from about 78, 79% up to about 89%. And it's a big difference. It's a big difference. And this does this by identifying when the institutions are driving the move and when they're not. And it does this by analyzing fairly complex trading data. Now, it's looking at a lot of data, but it displays the results in an easily identifiable format on the Thinkorswim platform. It's just in colors. I mean, the colors are going to tell you whether the institutions are in the trade or not. And this visual element makes it possible for even new traders to find the highest probability trade setup. This is really a key, because when you're learning to trade, being able to identify if a stock if the institutions are in the trade or they're not, this gives you a big edge over other retail traders, and this is gonna help a lot. All right, so that's very important. And by the way, the software, by Super System software, is displayed on the Thinkorswim platform, but you don't have to trade on the Thinkorswim platform. I don't trade on Thinkorswim. I just have the software displayed there so I can identify when the institutions are in the trade. And I'll go over a bunch of these charts here in just a bit. All right, so how are we getting an edge over retail traders? Again, only taking trades that are being driven by the institutions is critical. Trading stocks that have relative strength or relative weakness versus the SPYs and the Qs, and trading in the direction of the overall market. If you do these 3 things, you're going to be miles ahead of 95% of the other retail traders out there. Other retail traders don't have any idea if the institutions are in a trade or not. They don't even know about relative strength or relative weakness on how to use it. All right, so this gives you a huge edge. So again, how does this give us an edge? Our trades will be supported by institutional buying and selling. We're only going to be in trades that the institutions are buying or selling. The stock's going to be outperforming the index, the SPY, and it's going to be moving in the direction of the overall market. Okay, That makes it fairly clear as far as what we're looking for high probability trades and how we find them. Now, I want to emphasize this. The SPY Super System software, right? This is a piece of software that runs on Thinkorswim, and I have it displayed every day in the chat room, in my options room. I have it displayed, and I can change the symbols around, look at the SPY, or look at Tesla, look at Microsoft, whatever we want to look at. But the SPY Super System software is the key to this being able to be consistently profitable. The SPY Super System software is a critical element in finding and trading the highest probability trades, because the SPY Super System software is the engine that drives our exceptional results. This is how we get the results that we get, because this piece of software is able to identify when institutions are in the trades. And again, the ability to identify when institutional players are driving a bullish or bearish move and when they're absent is a key factor in pinpointing high probability trades, right? So that's the function of the SPY Super System software, the actual software, and it's a critical component. And again, there can be institutions in trades, but there can be some buying, some selling. We're only interested when they're buying or selling in enough force, with enough volume, with enough institutions trading in the same direction that we want to take the trade. Okay, that's the SPY Super System. I'm going to just show it to you before I get into it. I'm going to get into a lot more detail here on it, but this is what it looks like on the Thinkorswim platform. This is a 5-minute chart of the triple Qs, but the key here is these are your indicators. This is a long-term trend. This is a multi-time frame momentum. This is the current time frame momentum. To me, the momentum indicators are the most critical. They can be red or yellow for short, blue or green for long. And I have videos on all of this, by the way. So in this case, we have the Qs on a 5-minute chart. You can see right up until this candle right here, the institutions were selling. All right, see all that it is. And then the 5 minutes switched over to blue, which means that there was some momentum, some buying momentum starting to come back in again. So if you were short the Qs here, this is where you would get out. All right, and if you were short the Qs like right here, you see you could get in right here as it breaks down, then you had a nice win here. You picked up nicely. Now the other indicators that are on here, we have a thing called the pivot point. This is just a support or resistance level that I use just to identify when we're getting close to a level where we want to get out of the trade. But the key ones here is the VWAP. This is on the 5-minute chart, the volume weighted average price. Every institution uses a VWAP. This is a critical level that we use as a support or resistance level when we're trading off a 5-minute chart. The other one is this 15 EMA right here. It's a smooth 15 EMA. This is the little red line. It changes colors. If the price is quite a ways away from the VWAP, then the 15 becomes our support or resistance level. So these are the two critical levels that we use to get into intraday trades, the VWAP or the 15 EMA, right? And the little blue arrows here, these are what's called pop symbols, or pop out of the box symbols. The software produces these, creates these when you have a break of compression to the downside, and they'll be pink for a break of compression to the upside. And they're a very helpful aid in getting you into a trade. This was the perfect place to get into this trade. You see the compression, you see the breakdown right there with the pop symbol saying you're breaking below the 15. We're selling at resistance, right? We're going ahead and buying puts right here. And then we come down. I would have got out of it right here as it came down and hit the pivot point, right? You just take the trade. It hits the pivot point, bounces. You take your profits right there. But you could have got in again right here, and it didn't really go anywhere. So this probably would have been an even trade. But that's the SPY Super System right there. We're going to cover a bunch of these things. And I'm going to show you a few trades that we took just so you get an idea of how these work. This is a trade we took on SMR back on 513, just recently. 513 exited in 515 for 56% profit. We put 2,000 into the trade, and I'm just using this as a hypothetical. But when I put out my results, everything I'm basing it on is $2,000 per trade, just so I have a baseline to go by. That doesn't mean that's what you have to trade or what I have to trade, but this shows you if you were using the same amount into each trade, that this is what you're going to create. And it created $1,170 profit. So where did we get into this trade? Well, this is SMR. This was the earnings right here. And you see how it's yellow here, but green here? Institutions buying, but institutions selling. This is where we get in. You see where it went to green? The current time frame momentum went to green right here, all right? And that's where we get in. That was on 513. We entered the trade here. We get out of the trade here, and we get out. We're up 56%, and everything stayed green. We knew there was still bullish. We probably could have stayed in it, but it was running up against some resistance on the daily chart. But that's what we find here. And this told us that the institutions were buying it, so we got into it. All right, this was Tesla. This is on a 5-minute chart. This is a trade we took on Tesla. And just so you can see how these charts work. All right, so you notice here the current time frame momentum. See the different colors? Bullish, blue is bullish. We go to bearish, we go very bearish, and then we go back to bullish again right here. All right, on this, when it went from red to blue, and you see how the stock was popping right there off of above the VWAP, right off the 15. This is where you take the trade. As this turns blue, and the stock pops up. This is on a 5-minute chart. It's riding along the VWAP. The VWAP becomes your stop. You ride it up until it starts to show some red, and that's where you get out right there. So that's what it looks like. This is another one on the SPY. Just again, I'm going to show you a lot of these, but you can see the software in action here. All right. Current time frame momentum. This is a 5-minute chart, so this is what we're interested in. Yellow selling, blue buying. Buying right there. You see the pop out of the box symbol. See it breaking above the VWAP right there. The SPY. You see how it moves right up. You can set your stop now at the 15 because it's further away, and then you start to get some retracement right here. You take it, you get out of the trade. That's the setup. This is the institutions in here, and you can see they stayed in all the way over to here. All right, so that's important. Okay, this was a Wendy's. This is a day trade. This is an overnight trade we took off the daily chart. Daily chart on Wendy's. All right, you see the colors changing back here. Kind of obviously the multi-time frame momentum is this. Wendy's had been sold here heavily by the institutions, but on the daily chart, this is actually 9 days when you're looking at multi-time frame. But this was 1 day, and it switched back and forth. But here it went red, right here, as it starts to break down below the 15 EMA right there on the daily chart, and you take it short right there, which is what we did on Wendy's, and we get out right here and made some good money. It continued down, by the way, after this, but that was a very nice trade. All right, so this is just something to kind of get your attention. This is a trader who's not trading with knowing institutions are in the trade or not. He doesn't understand that trading with institutions is critical. If you've ever traded and you had a trade turn against you, like a FOMO trade where you get in at the top and it turns around and has to sit down, this is what you see. This is emotions. This is what you don't want to be trading with, is emotions. And this is a trader that's basically watching his P&L plummet, and you don't know what to do. And this are folks that I don't get this excited, but this are folks who have the SPY super system, and they understand the criteria that we use to win, make trades, and be successful. And this is how you feel, much more relaxed and much more profitable. Okay, now this is just something I just wanted to throw in here. This is the process precedes results. This is the reason I put this in here, is because so many people judge what their success is like, how good a trader they are, based on what their P&L is. Oh, I made money in that trade. It must have been a good trade. I lost money in that trade. It must have been a bad trade. It has nothing to do with that. The whole idea is the process comes before profits. Learning the high probability criteria and strategies has got to come before focusing on results. And we focus on this in the room all the time. You know, why are these trades good? Well, we're looking at specific criteria, right? If you're watching your P&L, you're going to be getting in and out of trades just willy-nilly. The P&L goes against you, you're assuming the trade is bad. It goes in your favor, you assume it's good. You have to understand, you can have a losing trade that was a good trade, and you can have a winning trade that was a bad trade. This is what is critical. Focus on learning the high probability criteria setups, how to use the SPY super system. The results will follow. Don't be following your P&L. I recommend you don't even look at your P&L during the day. Just look at your technicals on the stock and trade off of that. Okay, and this is just other thing. This is something I put in here because a lot of people have never heard of it. It's basically a mental process you go through. It's called the OODA loop. It's used heavily in corporations and in the military. Observe, orient, decide, and act. Right? It's meant to give you a checklist of what to do. So observing for me is using my scans, my watch list, and news to identify prospects. Once I've got the prospects, I have to orient. Identify whether the prospect meets the high probability criteria on the daily and 5-minute chart. Identify support and resistance levels. know the next earning date, and check the option chain. This is orienting. And now this means that the stock would have to have, the SPY super system would have to show that it's bullish for a long, bearish for a short. Once you get oriented and you've got it down to 2 or 3 stocks, then you make the decision on whether this trade qualifies as a good high probability trade setup and trade. And if it does, act. Make the trade, try to avoid analysis paralysis. And that's the just some information that a lot of people don't know. And I just basically, it's something to be aware of. All right, so here let's talk about the high probability trade setups. And we're gonna get into the Heiken Ashi candles and how to use those. The first thing actually is the SPY super system must align. You've got to have the SPY super system bearish if you're going long, bullish if you're going bullish if you're going long, bearish if you're going short. But the one thing most retail traders overlook is you want to make sure the daily chart and the 5-minute chart are aligned. If you're going to trade a stock long and you want to be in it for overnight or a week or 3 weeks, you've got to have a daily chart that lines up with it, with your direction. So if you're going to go long, the daily chart needs to be bullish. Then you try to use the 5-minute chart to get your best entry. If you're going to go short, the daily chart must be bearish. Otherwise you take away a huge amount of your edge. If you go into a long, if you go long a stock, or long a calls on some stocks, and the daily chart's bearish, and you're in it in the afternoon, the stock turns around and goes against you, you can't stay in the trade overnight. You can't even stay in the trade the rest of the day because you have a bearish daily chart to compare it against. That means it's likely to fall the next day. So this is important, all right? The daily chart must agree with the direction you're taking. Trade with the trend, if both the stock and the market, if there is one. What's the context? What's the context of the market? Are we having a choppy day? Are we having a gap and go? Are we having a gap and chop? Just understand what the market's doing. And I spend a lot of time every day talking about what the market conditions are for that day. Then the SPY super system must align. You've got to have the institutions in the trade, whether long or short, they need to be in it. So your colors have got to be blue and green for long, red and yellow for short on both the current time frame and the multi-time frame momentum for swing trades, and just the current time frame momentum for 5-minute trades. And also relative strength and relative weakness, we talked about this. And then enter near support, sell near resistance. All of these things are true. Then you're going to get some really high probability trades dropping out the bottom, and that is would be your stocks that you would be choosing from. Okay, so that's the high probability trade setup funnel. This is the process. This is how we orient ourselves. The funnel method. This is just what we just talked about. I just put it in here so when you get the video, you can watch these and read them. But SPY super system indicators must align in the direction of the trade. Number 1, stock to be traded should have daily and 5-minute chart aligned. Number 2, you've got to have these, right? Very, very important. And by the way, when you're trading intraday trades, and we're going to talk about this, the stock, if you're going to go long a stock, the price needs to be above the VWAP, volume weighted average price. Very critical to institutions. They all trade off of that, and below the VWAP for shorts. Okay, all right. Have patience. You're going to see that a lot. All right, so in the room, and in the alert service, these are the strategies that I use. Straight calls and straight puts, of course. Do a lot of straight calls and straight puts. I actually buy in stock sometimes too, but mostly straight calls and straight puts, and straddles and strangles. Straddles and strangles are non-directional trades. These are trades when you have a market like we've got right now. Straddles and strangles are a good strategy because you don't care which direction the stock goes in. You just want it to move a lot, one way or the other. So these become a good option for a trade if we don't know what the market's going to do overnight or in a week. I also use debit spreads using weekly options expirations, both call debit spreads and put debit spreads. This is how you take a trade to the long side or to the short side and reduce your risk on the trade. I also do what's called time spreads over earnings. This is a non-directional trade that captures premium from the volatility crash. When earnings are going to come out on a stock, the market makers jack up the cost of the puts and calls. They make them more expensive before earnings come out. Once earnings come out and they know which way the stock's going to go and approximately how far it's going to go, they peel that volatility out of the option prices, and we can capture that through what's called a time spread. Also have a strategy which we can't use right now. This is a weekly ATM strategy. It works on neutral to bullish trending markets. Too choppy for that right now, but it's a very nice strategy when the market allows that. So again, you see we've got a lot of strategies here so that we can match our strategy to whatever the market's doing. And then we do credit spreads to capture premium over a few weeks. You're probably familiar with credit spreads, perhaps. It's basically just looking for a stock that's going to stay above a certain strike price or below a certain strike price by an expiration date, and you set a credit spread to capture premium on that. And then we have the SPY super system. Now this is done in the room. These are not alerted. These are very quick trades, and they're only on. You can use them on the SPY, the Qs, the IWM, Mr. Russell, or you can use them on the futures. But they're off a 5-minute chart. They're very quick trades. You're only trading one trade at a time. But we do them in the room, and I identify them when I see the setups. And you're going to see the results of this. It's been extremely good. But you've got to manage these yourself, all right? So this is really not for a novice trader, but there are a lot of folks in the room who want to do a lot of trades, and this gives them the ability to do that and still stick to the criteria. All right, and just a quick note on the alert service. It's designed for day trades and short-term swing trades. I'm not going to be sending out alerts on stocks that you're going to be holding for a year. These are for day trades and short-term swing trades. They're designed for traders who can't watch the market all day or don't want to. And you're going to get real-time alerts on the highest probability trade setups. When you get an alert, it's going to be on a high, the criteria are all going to be met. If you look at the chart of the stock that you're getting an alert on, you'll be able to identify that it's a high probability trade setup. And we do this by identifying institutional involvement. I also look at market internals. Market internals being cumulative volume of stocks going up versus stocks going down. And then we do some technical analysis on this. All right, so that's when you get a stock on the alert service, or I call it in the room. These are what you can assume that the stock is made up. It's high probability trade setup that institutions are in. All right, now this is an equity curve from last couple of quarters. This also has some SPY super systems in here. So some of these SPY super system trades are trades that I take myself. The results I get because I can't alert on them, but I've got a lot of people in the room using them, and they've actually, some of them had better results than me, some worse, but basically this is my equity curve recently. Most of this is all just trades that we take in the room and on the alert service. All right, now we're going to talk now about Heiken Ashi candles, and if you have any questions on these as we go along, please post them here and I'll try to answer them. But trading using Heiken Ashi candles. Has anybody here not heard of what a Heiken Ashi candle is? Is everybody fairly familiar with the term at least? All right, so we'll get started here. Heiken Ashi candles. Trading Heiken Ashi candles using the SPY super system. It's another methodology. It's another technique that I use within the SPY super system to be successful trades, make successful trades. Now, this is a British pound, Japanese yen. Doesn't matter. These are candlesticks, right? These are Heiken Ashi candlesticks. These are not regular candlesticks. These are Heiken Ashi candlesticks. And this graphic is meant to show you what a bullish candlestick looks like and what a bearish candlestick looks like from Heiken Ashi. These bearish candlesticks, you see no upper shadow, flat tops. I just call them flat tops. Flat top candles are bearish Heiken Ashi candles. And you can see the trend that you're in here. Bearish Heiken Ashi candles keep coming down as long as this top stay flat. It's a downtrend, a bearish downtrend, and it's pretty strong. You can see that. When you start getting little wicks and tails, you're starting to get a little bit of loss of momentum. But one thing to notice about Heiken Ashi candles, you notice they always start in the midpoint of the previous candle, right? They'll always start at the midpoint of the previous candle. But this is a bearish Heiken Ashi trend right here. So what we're looking for is to be able to identify a Heiken Ashi reversal. We're looking for a reversal. Let's assume we wanted to trade this long, but we want to get a reversal off a support to go long. Right, so this is coming down, and you can see the bearishness. Now we're getting green candles with wicks and tails. All right, so we're getting momentum is starting to fade here. Now we've gone to a flat bottom candle. Flat bottom candles are bullish, right? Flat top, bearish, flat bottom, bullish. That's a bullish Heiken Ashi candle right there. That's actually a Heiken Ashi reversal, a bullish Heiken Ashi reversal. But I have to tell you one thing here, and that is when you get a reversal like this, you really want the candlesticks to be about as big or bigger than the ones that created the original trend. So for me, I wouldn't take this trade. Now you could take it and you do okay on this thing. But that's a Heiken Ashi reversal. But this is what I'm really looking for. All right. See this reversal right here? Flat top, doji, wicks and tails, flat bottom. That's a major Heiken Ashi reversal candle. Look at how big it is. That is your major Heiken Ashi reversal candle to the upside right there. That's where you would be, if you had a support level right in here somewhere, this is where you would take the trade. And you see how you got flat bottom, flat bottom, flat bottom, flat bottom, flat bottom, wick and tail, another flat bottom. That's a continuation, up, 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 and this is where you would get out. That's a beautiful Heiken Ashi reversal right there. You can see how nice and smooth the trend is. Okay, so that's what they look like. That's how we're going to be. That's how we use them in our trading. Now, this distinction of Heiken Ashi candles, what makes them distinct? Bullish Heiken Ashi candles have flat bottoms. We just showed you that. Bearish Heiken Ashi candles have flat tops. A bullish Heiken Ashi reversal are identified by flat topped Heiken Ashi candles, followed by flat bottomed Heiken Ashi candles, just like I had showed you in the last one. And bearish Heiken Ashi reversals are identified by flat bottom candles, followed by flat top candles. And that's how you find a reversal. And using Heiken Ashi candles for reversals is an excellent way to trade and be confident that the reversal has occurred, because Heiken Ashi candles are made up of two candles. So they inherently are a confirmation of the reversal in trend. Unlike regular candles, Heiken Ashi candles will confirm that you've got a reversal in trend. Okay, so those are the distinctions. I'm just gonna pull off some of the points of this. This is a fairly large article that I wrote back and read it quite a while back. But again, Heiken Ashi candles means average bar in Japanese. They smooth out the price action, so identifying trends and reversals is clearer. Makes it easier to stay in trades. Makes it easier to not get shaken out. They eliminate a lot of noise, and they make it easier to see trends and stay in the trade throughout the trend, allowing for improved profits. And again, I reiterate this. Bullish Heiken Ashi candles have flat bottoms. Bearish Heiken Ashi candles have flat tops. This is the main thing you want to take away from this, so you can identify them when you put them on your chart. All right. Again, reversals in bullish trend will have a flat bottom Heiken Ashi candle, followed by a smaller doji, followed by a flat top bearish Heiken Ashi candle. Those are the reversal in the trends, and we just looked at those. Right. So I'm not going to go over everything in here, but it's important to understand. And I do mention again, when you get a reversal, a valid Heiken Ashi reversal, the size of the candle height has to be at least as large, preferably larger than the prior candles that created the trend that's reversing. All right. All right. So I'm not going to go over those. These are just, this is basically saying make sure you use your high probability criteria when you're selecting the trade. Make sure the institutional trade is in there. Make sure you get relative strength, relative weakness, all of those criteria that we just talked about. Again, so this is just this will make it easier when you're going over this and after it's released and you see the video. Again, Heiken Ashi candles evolved from Japanese candlesticks. This is the technicals on it. They combine the open closed data from the previous period with the open high low closed data from the current period. That's how they create the candlesticks. Okay. Again, this fusion minimizes market noise, providing a clearer depiction of the trend. Okay. And understanding trends again. Let's talk about this again. I really want to emphasize this reversal, because this is the main reason that the Heiken Ashi candles are of such big use, is identifying reversals and staying in these trends. A flat bottom candle in uptrend signals a strong visual of the current trend. Right, so you can see how strong this trend is. If you come in here and see that downtrend with the flat tops, bearish, 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 switches to bullish, and here we go, bullish right here. Now, if this was like the VWAP or the 15 or 50, the 50 SMA on your daily chart, this would be a support level. See how it breaks out of here, and you get good sized candles, and then it continues up. You see how this trend continues with flat bottoms. You get a little choppiness, and then you're right back into the trend again. You can see this trend very easily. And up here, you can see this is where you want to get out. You see how we get these flat bottoms, starting to get dojis, you get wicks and tails, and then you get a flat top right here. Heiken Ashi reversal to the downside right there. You want to exit the trade. It bounced again, but you want to be taking your profits right up there. All right. Okay, so that's the cover, the kind of Heiken Ashi candles, what they look like. I'm going to go over them on some regular trades. Can I go back to the prior slide for a second? Which one do you want, Rain? Tell me which one you want, because I'm not sure which one you mean. I don't know if you had ones with the candlesticks on it like that. Okay. All right. So this is again, this is a great depiction of Heiken Ashi candles right here. We're going to see them on some live trades in just a bit here. Again, tips for using Heiken Ashi. A lot of these are the same tips you would use for any trades you're taking. Examine nearby support or resistance level impacting potential gains. Don't take a trade. I don't care if it's Heiken Ashi reversal or normal trade. If it's a bullish trade and your 200-day moving average in the daily chart is 10 cents above where you're at, because you're going to be trading right into resistance. So don't be entering near resistance if you're going long. Align the trade with the current market trend for increased success if there is a trend. Again, choose a stock with relative strength, relative weakness. I do monitor the Bollinger Band expansion, but it's not something that you have to do. And after I'm in a trade, when I'm thinking of getting out of the trade, I switch to regular candles, because if it's reversing to the upside and I'm riding the trend up, I prefer to catch the reversal to the downside more quickly, which would mean I can see the first candle that starts reverse against me if I'm going to take profit. So I switch from Heiken Ashi to standard candles so I can exit the trade a little bit sooner. All right, and again, here's the distinctions again. Bullish Heiken Ashi candles have flat bottoms, bearish have flat tops. It's really important to understand. The Heiken Ashi reversals are identified by flat top candles, followed by flat bottom candles. Okay, we looked at that. And bearish Heiken Ashi reversals are identified by flat bottom candles and followed by flat top Heiken Ashi candles. Okay, and here's a recap of the advantages. It smooths out price action, reducing noise. I think you can see that, and I'll show you that on some charts. Makes identifying the trends much easier. It improves identifying confirmation of trends or trend reversals, especially trend reversals. Trend reversals are one of the best ways to use Heiken Ashi because it gets you into a new trend early. And it helps identify potential exits when the candle body shrink or reversal occurs. All right, so those are your Heiken Ashi advantages. Now this is I'm going to go with some live charts in a minute, but this is a chart on Uber. It's an old one, but this is a standard candle chart, right? These are standard candlesticks on Uber right here, right? You can see the big gap up, gap. See these gaps in the bullish movement here, right? And this is on the 1st of May right here, a couple of years ago. Here is a Heiken Ashi candlesticks of the same chart. Regular candles, Heiken Ashi, all right? Here's May 1st right here. Here's May 1st right here. You notice there's no gaps on Heiken Ashi candles. And this is where you would have taken the trade. You see right here where you got flat bottom, flat top, flat top, flat top, and it reverses to flat bottom. That's a Heiken Ashi, a bullish Heiken Ashi reversal right there. This is where you would have got in. This is what you would have caught, right? And then you're watching for it to slow down a little bit. This is, by the way, on TC2000. I'm going to show you them on the SPY Super System, but they're very easy for me to identify in TC2000 for visual purposes. But here's where you would get out of the trade as it slows down. Okay, now I'm going to look at some live Heiken Ashi reversals from Friday's trading here. ADMA, Brandon? Yeah, the ADMA is 8 exponential moving average. I do use that. On this one I looked here, this white line is the 8 that I use on my TC2000 chart. All right, so we're going to look at some live ones here. Now I'm going to do a couple things here. First, I'm going to go ahead and bring up the SPY Super System. Okay, so this is the SPY Super System right here on Thinkorswim. This is what it looks like in the room every day. I've got scanners running. I've got the SPY super system up here. This was on KHC. This was Kraft Heinz. This is a trade we actually took this past week. Made some good money on it. It was a swing trade. All right, if you look at it here, we took it right here. See how this went to red? This is where we took the trade, and we get out the next day. We made really good money on that one. But I'm going to show you some Heiken Ashi reversals on here on the daily chart. I'm just going to move this out of the way, the scanners, so we can see the chart a little bit bigger. All right. So a couple of things we want to look at. I want to look at the stock called UEC. All right. So this would put UEC in here. Again, this is a live chart on UEC. This is uranium energy. Right? This is uranium energy. You see this? See this move right here? All right. So these are standard candles. All right. These are standard candles. Notice that we went from bearish to bullish. See the blue right there? All right. So let me go ahead and switch this over to Heiken Ashi. See with the candle type. All you have to do on any of your charts is just switch from candle to Heiken Ashi. Okay. Here's Heiken Ashi. See the Heiken Ashi flat tops here? Bearish, bearish, bearish. Dojis, see the flat bottom? Huge move up in UEA right here. All right, that's a Heiken Ashi reversal candle. Notice how it corresponds with the current time frame momentum switching over to blue. All right, that's UEC. I'm going to look at a couple more, and then I'm going to show them to you on TC 2002. IONQ. And this is on the daily chart, because you can get Heiken Ashi reversals on the 5-minute chart for intraday trades. This is for swing trades. But here's IONQ. And you see the Heiken Ashi, this actually has a little tail on it. Here's Heiken Ashi reversal right here. But look at the buying. Look how you can tell the institution's been buying the heck out of this thing ever since earnings. All right? But this is a big move right here. A good Heiken Ashi reversal, perfect. You can buy it there, you can buy it here. On the daily chart. BWXT. BWXT, another Heiken Ashi reversal right here. All right, see how it's just kind of chopping along? This, by the way, this shaded area is called the dynamic compression zone that the SPY super system creates. Tells you you're in compression. But here, see the Heiken Ashi reversal? Flat top, flat bottom. I'm sorry, flat top, flat bottom, yellow to blue, bing. Institutions are in there buying BWXT. All right, so that's another nice long. I'll show you one more. SMR, which we traded the last week. Again, another beautiful Heiken Ashi reversal right here. See the dojis right here? This was a Heiken Ashi reversal back here. Then your doji, this is a Heiken Ashi confirmation or continuation. See the flat bottom right there? Now that you can buy this again, SMR right there. Really nice. All of the stocks that are in the nuclear energy, SMR, OKLO, and NNE are all nuclear stocks that bounced up on Friday. All right. Now, if I go back to a 5-minute chart here, let's just look at there wasn't too much to trade on 5-minute chart on Friday, but let's just look, for example, let's just arbitrarily pick a stock like Tesla. All right, so here's Tesla. Now you can see how much the colors are changing here. We don't really have any kind of a trend in Tesla. All right, very difficult to find any kind of a trend. But you know, you're trading here between the 15 and the pivot point, so it was a stock that there was no way I was going to be touching that on Friday. All right. Let's take a look at Ross Stores. Okay, Ross Stores. Ross Stores. I actually shorted this on Friday. Now this had earnings, by the way. This is coming off earnings, but see this run up. But it was red for the day, big time. It had gapped way down. So now I'm getting a Heiken Ashi reversal candle right here and here. You see how it fell through the 15 EMA right there with the pop out of the box symbol? See it's yellow, it just went from buying to selling. This is where you take the trade short, right there. And you just write it down. As long as it stays below the 15, you stay in. Goes above the 15, you get out. Wasn't big, wasn't good for a lot, but it was good for about $1.25 a contract, $125 a contract on the puts. All right, on Ross Stores. So you can get these on stocks or the SPY super system on the 5-minute chart. This is a SPY super system here. There was some opportunities for long and short during the day, but it was a very choppy day. Most of these trends didn't last very long at all. Okay, This was one here. You can see it went from yellow to blue right there in that candle. You could have got in there as it broke above the 15 and get out right here. Not a huge profit, but probably $80 or $90 a contract on SPY. All right, so that's what it looks like on the SPY Super System. That's how I find them during the day. I want to show you some here on over here on Thinkorswim, just so you can also see. I'm sorry, this is a TC2000. This is another chart I use for charting, a platform I use for charting. And again, let's take a look again at UEC here. See how clear it is. See how clear it is. This is Heiken Ashi candles right here. Big, huge reversal, big volume. And we go over here. That's what the regular chart looks like. See how it broke above this pink line? That purple line, that's the 200-day moving average, right? Because that's UEC. I'm going to look at the same ones we just looked at. There's IONQ. That's it. Regular candles. It's Heiken Ashi candles, right there. Flat bottom. Big candle and a flat bottom. We'll look at some shorts. Lumen. Here's a short in Lumen. WMN. Again, you can see that this is reversed down. See how it reversed up to the side here? It reversed down, flat top, flat top, flat top, flat top, wick and a tail, another flat top. This is a continuation to the downside on Lumen. So you get them both ways, long and short. Eli Lilly, you probably know Lilly. This was a beautiful Heiken Ashi reversal. This was earnings. This is followed by a Heiken Ashi reversal to the downside or a continuation. Look at the trend. You see how easy this trend is to see? And you see how you can see when it's starting to fade, right? And now it's coming sideways, and here we go. We're back into the trend again, so you can take it short again on Lilly. Right? And so those are what they look like. Here's another one, MSTR. If you're familiar with crypto, MSTR, MicroStrategy, big crypto stock here. This is the Heiken Ashi candles here. You can see it was in a beautiful uptrend. See how it broke out here on the daily chart with the Heiken Ashi reversal right there and there, and it followed. See how nice the trend was, all right? And now we're reversing back down again. That's a pretty big Heiken Ashi reversal candle right there on Friday. And there's a trend right there, so I got some other resistance levels, support levels down here. But that's what the Heiken Ashi looks like. So that's what they look like on both TC2000 and on the SPY Super System. All right, so we just looked at some of the ones from Friday. All right, so that's Heiken Ashi. Do you have any questions on them right now? Arthur, do I also use TC2000 live charts? How many monitors do you have during your trading? Also, so you do trade multi-day swing trades with Heiken Ashi? Absolutely. One of the scans I do for at night on TC2000 is I look for Heiken Ashi reversal candles on the daily chart, and that gives me the particular setups that I'm looking for. I do use TC2000 live in the day, and what I do is during the day, if somebody's looking for a specific stock, first we look on it and Thinkorswim on a SPY Super System, so I can look at it there to see and make sure institutions are in the trade, and what the indicators look like, where we are on the indicators, and then I'll move over the TC2000 chart so I can look at a little bit deeper technical analysis on it. But you don't really need to do that, but I do it because I can show them why a trade is good or why it's bad. The TC2000 will show me, 200-day moving averages on the daily, 100-day moving averages on the daily, and I will use those. So I do use those, and I basically slide them over. So I switch the screen out to TC2000 and then go back to the SPY Super System, which I keep up all the time on the Thinkorswim platform. All right. Now, before we get into the results, I do want to talk about one thing. I don't usually do this, but I want to talk about the daily chart on the SPY, on the S&P 500. All right, and I want to go back over history, what's going on here, and why swing trading has been so very difficult recently. A lot of it has to do, of course, with tariff talk. This is a news-driven market. This is not really a technically driven market. It's not even fundamentally driven. It's being driven by news. But this was the SPY Super System. This was the TC2000 showing me on the daily chart what the SPY did after we get up to a pretty much a new all-time high. And we pulled back. Now, the few key things in here is this purple line is the 200-day moving average, all right? Very important. And move to regular candles. And the blue line is 100-day moving average. Now you can see what we've done here. This is when the tariffs went on. All right, see the gap down, big move down, gap up and gap down. Then the tariffs were paused. Huge candle. This is the biggest green candle on a daily chart I've seen since about 2008. Okay, really important. So this pushed up. Now what happened here? People that go short the market here get crushed here, right? And I have known a lot of retail traders that got margin calls and are basically out of business because of this reversal with these gap downs. And then these people jump back in again long and they get smacked right down the next day. That's a big, big gap down. This is the choppiness that we've been dealing with in this market. A lot of gaps. Gaps are very difficult for swing trades. Then we come in here and we start it up and it looks like we're getting bullish, right? Stock moves up, market moves up, we compress a little bit and then we come up and we put six green days in a row right here, all right? Big, strong move up. Looks like we're heading for another all-time high. Then we put in a little doji candle and then kaboom, we come right back down again and we're coming down. Now, why this is, I'm showing this because this is extremely critical, right? Anytime the market typically makes a move up or down, in this case, it gapped up through, see the 200-day moving average purple, 100-day moving average blue, it gapped up through there. Didn't test it. Almost always the spot market is going to test those 100 and 200-day moving averages when they gap up through them like that. And now here we are down. You see where we ended on Friday? We tested the 200, we tested the 100. That was a test of both of those big moving averages. So this coming week is going to be critical. If it breaks down below the 200, we're likely heading all the way down to the 50. If it breaks back above these again, we're likely headed back up again. So that I just want you to understand that how important the context of the market is when you're taking trades. Okay, that hopefully that's clear. And again, I don't usually cover that, but I just wanted to explain what's going on market-wise. Okay, so now we're going to take a look at the results we've had with the SPY super system in the room. This was just going back a couple of years, 2023, $2,000 invested in each trade that we took in the SPY super system or in my option room, produced a little over 60,000. And that was using a 2,000 per trade. This just tells you how much of a percentage of your account you'd be using. But in 2024, $2,000 in each trade produced about 55,000, a little bit less. Now the results you get, the profits you get, are obviously going to be dependent on what the market's doing. If we've got a nice trending market, we can stay in the trade a lot longer. If we got a choppy market, we have to be getting out of trades fairly quickly. So choppy markets reduce the profitability that you can get. You still can be finally nice profitable, but they're going to reduce it. And you're going to see that in some of the monthly results that we had. All right, and this was what happened when the tariffs went on and then tariffs paused. The market was down, SPY was down over 10% in 2 days, right? Market dropped 2 days, 10%. These are the only trades we had on in the room and on the alert service at the time, all right? On 328, we had Broadcom. We entered for $75 a contract. We get out for $1.04, 39% profit. On Nike, we get in on 328. We get in for $285 a contract, get out for $9 a contract. This is the biggest trade I've had in 2 years, 216% on that trade. And that was when the tariffs went on, or they were going to put the tariffs on, all right? I had Sarepta in at 450, out for 8, 78% profit. And that's 2,000 invested, produced 1,400, and 42 NNE, that was the nuclear we just looked at. I entered for $1.80, closed 225, 25% profit. This is more typically what you're going to see, 25 to 40 to 50%. But these are the only trades I had on during that whole period of time, because trade the best, skip the rest. Don't overtrade. This is why it's so important. We had very few trades. That's a outstanding results for 1 week when the SPY was down 10% in 2 days. All right, so this is 2024. I'm going to run through these pretty quickly, but I just want to show you these same day or overnight or both. On this particular case, these are all overnight. These were all overnight trades. There was no intraday trades here in this particular time. I had some intraday trades, but I didn't post them. I didn't alert on them, obviously. I took some during the day, and a lot of the folks in the room did. But these are the ones that we alerted on, and these are the posted room trades. All right, now, again, January 2024, what I want you to see here is it's very important to me that people understand what the expectations are for this trading services as far as what they can expect for profitability. I don't want you to think that you're going to make 2, 3, 4, 500% on a trade. I know you hear that from a lot of people. You get a lot of services that tell you, you can turn, $5,000 into $500,000. We get 300%, 400%. That's not the way this works. All right. The way this works is we grind out 10%, 43%, 37%, 32%. This was in January 2024. We had 20 wins and 2 losses. That's pretty good. 90% win rate. We had 2 losses. Gilead, we lost 100. That was a news event that knocked us down. May 75.05. All right. February, again, you can see the percentages, 56, 25. Now we did have a nice one here in triple Qs, and we had a nice one in Fortinet, 50%. But you can see they run anywhere from 10, 20, 30, 40%. That's typically what we get. In February, we had 24 and 2, 92% win rate. We've had to cut the number of trades way down in the last couple of months because of the market. But 2,000 invested, that produced 11,745. That was our best month last year. All right. In the alerts, we had 20 and 2, up 69.30. So pretty good month. I'm not going to go through every month, but I just do to kind of highlight what these percentages look like. This is what you can expect. You can see we had 15 and 2 here, 4,900. The profits, I'm not going to be running 7,000, 8,000 every month in a market like this. We're typically right now making somewhere between $3,500 and $5,000 a month. Okay, but so this was made. We had some time spreads in here on earnings, but you see 18%, 40%, 48%, 38%. This is what you're going to see. This is what you can expect. So your expectations are in line here, and you're not going to see 5 trades a day. You're going to see 1 or 2, maybe 0. David, this is interesting. You like the objectivity of your observations rules. Do you have a similar set of rules for the option contracts, types of contracts, calls, puts, spreads, etc., expiration dates? Yeah, I do, and I actually go over that. I'll talk a little bit about that as we get through this, but I do have the particular option strategies that you use, whether you use straight calls or straight puts, whether you use debit spreads, whether you use straddles and strangles. All of that is dependent upon the market. I have different strategies I use for the market. When the market's choppy and I'm getting gaps all over the place, I'm typically going to use straddles and strangles. I'm going to use non-directional type trades. And if I've got a really wide spread on an option that I want to go long, I'm going to do a debit spread, because the wide spreads will kill you. But with a debit spread, you can take advantage of it. And I have videos on all those things. But yes, I have strategies in that. One thing I'll tell you, if you're buying calls or puts, you want to be in the money. You want to be out at least 2 to 3 weeks, even if it's a day trade, and you want to use a delta of about 70 to 75. Okay, these are the June trades. I just want to get through these so we can get to some meat of this stuff. But again, this is June, 25 and 4, pretty nice month. Again, you can see we had a couple of losses. We have losses, just be aware of that. There's going to be losses. But you can see what the percentage gains look like, 20, 30, 40%. Same thing in July. Again, continuation. August, we did have only a 75% win rate in July, by the way, in the alerted trades. Still made 3,300. August, only 19 trades. And here's September. This was my losing month. I had 1 losing month in the last 2 years. This is it, right here. This was in September. And I wanted to point this out. A lot of people won't show you any losing trades they have. They have losing trades. Everybody has losing trades. If they tell you they don't, I'd get the heck out of there pretty quickly. But this was September. Again, you can see the percentages was nice, but we had 8 and 5. We only had 13 trades and we had 5 losses. Tough market to trade. This is probably the lowest percentages I've had ever. And we netted, we lost 1,700 in the room and 295 in the alert service. Pretty minuscule compared to what we do, but I want to point that out. In October, we bounced right back with 17 and 3, 7,400. And in the alerts was 14 and 3. Right, so again, percentages stay the same. So I'm not going to go through every single one of these. You can see the results. Let me get a sip of water here. I'm getting a little hoarse. I know this is a lot of stuff to absorb, but it's really I'm trying to explain how important understanding when institutions are in the trades. It all starts from there. And that's where these results are coming from there. Just water. January, February, March so far, and I got, this is actually up through April. This year, 15 and 3 in January, 31, 35. As I told you, we had to cut down because the market has been so volatile. 16 and 2 for 3,800. March 20 and 4 for 7,800, and April 11 and 2, only 13 trades for 5,400. All right, so that was our trading in January, February, March, and April this year so far. But you see that if you look at the results, you're going to see the same percentage gains. Now, just to show you, as far as when you get an alert, what it's going to look like, you're going to get an alert that's going to show you this. It's going to say the stock symbol, the option strike price, the option expiration date, and the price to pay for the option. And that could be a range. It could be, you know, $1 to $1.05. So this is a live alert that we did. This was on the Nike trade, 328. That's the date we put the alert out. Nike buy the April 11th 67 puts for 285. Okay, now that's all it would have been on the first alert, just telling you to buy it. Right, then you'll get another alert, which will repeat this, and then it'll say sell order for $9. Right, and then you get a final alert. Once it's done, they were sold for $9 on April 3rd, and I probably would have put the percentage in there, 207%. That's what your alerts will look like. Okay. Do I have a Gregory? Do I have a day trade in zero DTE expirations options? Yeah, I do, and I'm going to show you that in just a second. It's called the SPY Super System. Scott, repeat the call and puts requirements. Well, requirements that the only thing I can tell you in calls and puts. Again, the strategy that you use is going to be dependent on what the market's doing, whether you use straight calls, straight puts, straddles, strangles, debit spreads, etc. But for calls and puts, if you're going straight calls and straight puts, and they're going to be either all day long or you're going out, you want to, you may take them overnight. You want to go 2 to 3 weeks out at least, and you want to take a delta of 70 to 75 or so. In the money, always take in the money, okay, for your standard options. Do I ever trade zero DTE? I do trade zero DTE, and I'm going to talk about those in just a minute, Gregory, because I do a lot of zero DTEs on the SPY, the Qs, the IWM, but you can do them on the futures. Very specific criteria that we use. We use the SPY Super System to tell us to get into those trading when the institutions are in them, only when the institutions are in them, and it's very lucrative, but it takes quite a bit of, you just can't put the trade on and leave it. You got to babysit it. All right, so how do we achieve these stunning results? So I pretty much told you that already, right? We follow the process. We're able to identify when institutions are driving a trade and when the market internals are heavily bullish and or bearish. We know that, right? So we can only take trades when both of these are in our favor. I will take trades that the institutions are in, but the market internals are neutral. As long as the market internals aren't against me, I'll take those kind of trades. And that's going to give us take trades with following the institutions. That's trade the best. That's what trade the best means. And how do we find these? And I've talked about this already. We do what's called a triple screen assessment. We look at momentum trend. We also have some money flow, but we look at the key thing here is momentum. To me, this is the most key thing. We're looking at momentum on current time frame and multi-time frame. Multi-time frame means on a 5-minute chart, we're looking at the 5, the 15, and the 45. Right? 5, 15, and 45. They're being looked at together, you know, individually, but as one group. And if the momentum is moving up on all of those three time frames, and the trend is also moving up, the likelihood that the institutions are driving the trade is extremely high. Now you have to understand what momentum means, all right? The momentum indicator we use, the current time frame momentum, the multi-time frame momentum, does not have divergence built into it. It only has momentum, strict momentum. And the way momentum is measured is, if you look at a 5-minute candlestick and you look at the next 5-minute candlestick, if the close of that first candle or the second candle is getting closer to the high for that candle, then you have momentum. So you have the close of each candle has to be getting closer to the high of that candle, and it has to be occurring across 3 time frames. That's how you know that institutions are in the trade, and you're generally going to see higher volume as well. All right, so here it is. This is the SPY Super System again right here. This is the software. This is what drives all of this. We talked about this. This is the long-term trend, multi-time frame momentum, current time frame momentum. blue and yellow, red, short. I'm sorry, red and yellow short, blue and green long. That's all we really need to look at colors. This is the actual indicator itself, so I can judge how fast this momentum is moving up. See, this was momentum went from red to blue, but the momentum indicator wasn't really moving up really quickly. All right, here's your pivot point on the 5-minute chart, your VWAP, which is your 15 EM, which is your which is your support resistance level, the 15, which is a support resistance level. All right, and here's your pivot point and the pop out of the box symbols. That's all you need. Now we also have, for folks who buy the software, it comes with 2 templates. It comes with this template, or you can also have this template, and you can swap them back and forth. This is for people who are doing 0 DTEs, Gregory. You're talking about 0 DTEs. This is what you do if you're trading the SPY, the Qs, the IWM, or the futures, and you're only using 5-minute candlesticks. You can use this template right here, and it just shows the current time frame momentum. It shows the VWAP, it shows the 15, and your pop out of the box symbols. You don't need the other ones for trading 5-minute charts for intraday 0 DTE type trades. This is what you use right here. All right, so and this is on the SPY right here, and you can see here, see how the SPY, it was blue and green. We went to quick yellow, but we're right back to green again. Breaks through the 15, you grab it right here, and you can take it up and then take it off. And you can do it again here as it went from red selling to blue buying. Right off the 15, you take it right here, and your 15 becomes your stop. You stay in it, starts to reverse back, you get out. All right, and this was a Heiken Ashi. This was using Heiken Ashi reversals here on the SPY Super System. Again, 5-minute chart. All right, here's your indicators. This is what we're interested in, current time frame momentum. It's bullish here, green. Notice that when it goes to yellow, momentum is waning. The institutions are selling. Stock breaks down on a Heiken Ashi reversal candle right there, right at the 15. You take it right there, and you can stay right in this as long as the stock stays below the 15, which it does for a long way down. All right, and that would be a 0 DTE type trade, Gregory. So this is the SPY Super System. This is what I was talking about. These are not swing trades. These are intraday trades for folks who just want to do trading the SPY, the Qs, the IWM, or the futures, and they want to do it off the 5-minute chart. This is what I do in the room. Now, I let you know when I see those setups, but I can't post them. I can't call them out, because if you trade these, you know, they're very quick. There's no time to do that. But these are the results I've had with this. I started doing it in July. I started exposing it to the room in July, 16-0, 25.96. And you can see I have not had a losing month with this SPY Super System. And there's a lot of trades. August 56, 6 and 2. That's a lot of trades. Most of these trades only last 2 or 3 candles, maybe 5 candles if you get a nice trend. But so this is what the SPY Super System, trading the Qs, the SPYs, the IWM, or the futures. I don't trade the futures during the day, but I use the SPY, the Qs, the IWM. Here's what we've gotten, and you can see the results have been excellent. Again, you only have 1 trade on at a time with this method. You can still be trading with the other trades we do in the room, but you can also trade the SPY Super System 1 trade at a time, and they will be very short duration, and you have to watch them. All right, and this was November results, 93.70. December results, 10,450. January was also a little over 10,000. I haven't gone through and calculated all the rest of the results for this year in the SPY Super System. They're all positive, and but it takes me quite a bit of time to put that all together. All right, and so this is what the last quarter of last year was, and it's important to understand that the totals I showed you in the room don't include the totals from the SPY Super System. These are 2 separate methodologies. SPY Super System methodology uses a SPY Super System to trade the indexes off of a 5-minute candlestick, very quick trades. Everything else, these are all posted and alerted, the ones that are in the room. So these are the results I had. All right, I can't post these, but these are what you can approximately what you can expect. This is what you would have got if you were in the room or on the alert service. All right, and this was November, pretty nice. December, right here, only had quite a few losses on the SPY Super System. Got very choppy, but still nice profits. In the room, we only had 14 and 3 in December. In the room, we didn't have a lot of trades, but still made about $5 grand, 4,500. All right, so that was the first quarter, just to show you what the money was. again, it's important to understand that the profits we make, why we're profitable is because the SPY Super System software, it tells us when to be in these trades and when not to be in these trades. All right, so I'm going to run through a bunch more of these charts if you want to see them, but I'm not going to spend a lot of time on these. I've already shown you quite a few. This is the SPY Super System setup. I've already shown you the indicators and how they work. This was one we had way back in August. This was a $220 profit per contract. This is where I got in right here. See, it went from red to blue, current time frame, popped here, and moved right up. And get out up here as it broke down, $220 profit per contract. All right, and I'll just show you, you can see these. This was a very quick trade, in and out, $90 profit per contract. Got this, this reversal on this thing. Again, it was bearish. Institutions were selling. This is only thing we're interested in on the SPY Super System trades, current time frame momentum. You can see it. This is all you really need right there. Same trade. This is just with the template that's got the SPY Super System for just the institute, for just the 5-minute indicator on there, the current time frame momentum. All right. So this is another run we had here. Again, on this particular trade, see, it's green and then went to yellow. I actually hesitated and didn't get in until I went back to green again. So I gave up a little bit. I could have taken it right off the 15, but I didn't because of the yellow, but I went right back to green. Pretty nice trade there. This was a very nice trade here. You can see it breaking out. Notice the institutions are buying the heck out of the SPY here. No question at all that this is a bullish trade, right? You just try to find, just pick your spot, which is your breaks, it compresses, you get a pop out of the box symbol, a signal, you take it right there, and up it goes, and $130 profit per contract, that was on the SPY. All right, so I have quite a few of these, but you can see what I'm talking about here. Current time frame momentum is what drives this. What are the institutions doing on the 5 minutes? They're selling, they're buying, time to get in. And this one took a long time. This was an IWM, doesn't move as quick, but we got $90 a contract on that thing. That's quite a long, typically you're not going to be in the trades this long. And I would say your average trade on the SPY Super System is going to produce more in the neighborhood of about $80 to about $150 per contract. 10 contracts, you know, about $800 to about $1,500. Do you have to be watching or can you just take calls? Well, if you have to be watching if you're using the SPY Super System trade, Jay. I mean, you've got to, because you've got to know when to get out of these things. They're pretty quick. Now, if you're taking the alert type trades that we take, which are typically going to be all day, or they're going to be overnight or out a week or two, then you don't have to watch. You'll get alerted on those things. Right, here's another one here. Again, see it breaking down. Just some examples of how this system works. You can see how easy it is to see that the institutions are selling these things. Really, it's really helpful to have these colors. But we see what we can see. We can see the compression. We can see the breakdown below the VWAP. You can see the fact that you're getting a compression break right here. You can see that the institutions are selling it. There's just no reason not to take that trade. The days that it's hard is when the market's chopping back and forth above and below the VWAP. And it's really hard to take any trades. You need to have some trends to follow because that's what you're trying to do here. Here's another nice one, selling, buying on the IWM, breaks above the VWAP in the 15, you take it right here and you ride this thing up and you get up all the way up here and you get out $150 a contract. Okay, so Chip, on the SPY Super System trade results that I posted, how many contracts we are trading, that is using a basis of $2,000 a trade. So the number of contracts is going to be dependent on how much the options cost. If I get into a SPY call and it's $2 a contract, I'm going to take 10. All right. If it's $3, I'm going to take 6 or 7. If it's $1, I'm going to take 20. In other words, I'm taking the number of contracts that equal $2,000 in cost. Okay. All right. So there's another SPY. This was one I didn't show you my entry exit, but I kind of wanted to see if you can see it. Right. Selling, buying is blue. This went from selling to buying. This is an old chart, by the way. This isn't here anymore. This has the actual momentum indicator. But you see, we went from selling to buying. See how it broke up above here? Would I get in here? I would not. You see how it's right against the VWAP? This is where I enter the trade right here. As it breaks above the VWAP, institutions are buying. I take it right here and I write it up and I'm over right here. It's a very quick trade. Here's another one. This is one I took short right here. As the market breaks down, current time frame momentum is red. The VWAP is getting broken by a pop out of the box. I take it here and I get out right here as it bounces. And then I get back in long again as it goes back to blue again. The institutions are buying. I buy it here, keeping in mind that I've got a pivot point here. So I take it, and when it gets up near the pivot point, I take profit. So I took it short, took it long. All right, and there's some more SPY trades here. So you can see all of that. Omar, to make all the trades of 2,000 each that you make in an average month, how much money should I have in my account? Well, if you're going to be taking the SPY super system trades, you're a day trader. All right, in other words, you've got to have enough to keep you out as a PDT, a pattern day trader. So you're going to be trading certainly way more than 5 trades, or 3 days, three trades in 5 days. So you've got to have. I would recommend to do this. You would probably need about $35,000 in your account to make sure you got the 25,000 base and some money to trade with. All right, and then your result. You can then base it. You might not want to put 2,000 into a trade. You might want to put 1,000 into a trade, or 1,500. I mean, that's up to you. But you got to have enough in your account for day trading. Now, you don't need that much money if you're going to be doing swing trades and trading off my alerts, because most of those trades are going to be overnight, which means that eliminates you from worrying about a pattern day trader. And a lot of trades we take, the time spreads that we take are over earnings. We take them in the afternoon, we exit them the next morning. Those don't count as a day trade. Yeah, 35K is fine, absolutely. Yeah. Okay. And now these are some of the charts that we did. These are regular trades. These are not SPY super system trades. This is the one I showed you. This was SMR. This was a daily chart. You can see how it's the buying here. We took this trade here. We get out here. That was a 50-something% or whatever it was that we took. That was a big gain right there on that trade right there. All right, really big gain. This was Nike. This was the huge one we took. We took this on the 28th. It actually was up money on the 28th. Some people actually took profits on the 28th. They get in at 285. They get out at about 385. I kept the trade, and when I exited the trade, this is when we exited. This was the tariffs come on. This was the drop down. This is what we got, 216%. We took it right off in the first thing in the morning. I have a rule that I live by, and that is gaps are gifts. A gap is a gift when you're short a trade, when you're short a stock and you get a gap down like this, take the money. A lot of people sit there and think they're going to let this thing run, let it run, let it run. Gaps don't usually just keep on going. Sometimes they will, but the point is, this is a gift. You've been given a gift of a huge profit. Take the money, right? So gaps a gift to the downside for shorts, to the upside for longs. That was Nike. This is Sarepta that was in also that same group. You can see how institutions were selling it. We're waiting for a break of compression. We get it right here. We take this one down, and then we get out. HIMS, this was when we had long back in February. I was kind of late getting into this, to tell you the truth. I took the trade right here. It was they were buying it all the way along. You see, this is the daily chart. Current time frame and multi-time frame momentum both went green right here. But I didn't take it till here. I don't know. I think I just didn't see it. Anyway, I took it here. And VWAP, by the way, is not effective on the daily chart. This shouldn't even be on here. I don't know that you can take it off and toss. I think if you put it on the 5-minute, it stays on the daily. But anyway, this was where I took the trade here, a 25% profit. And I left the runner on. When I posted the trade and I took the results for the room, I put it in as a 25% profit. But I stayed in the trade with a runner, and it went up 269% profit on the runner I had left on that one. Palantir, another nice long here. This is one we took, and 31% in 2 days. Selling, right? Selling yellow, buying green. We take it here on the daily chart. It's breaking out. Lulu, this was a beautiful short. We took it over here. It was gap down. See this? See the institution selling the heck out of this thing? Now notice it goes blue here. There's a little bit of buying. Now they go back to selling right here. This is where we took it as it breaks down. And overnight, in for $192 a contract, out for $300. That was Lulu. All right, Amazon right here. Same thing. This was a 5-minute chart. This is with 32% in 45 minutes. You can see the compression. You can see the buying. You take it here and you write it up. And with 45 minutes, and we took 32%. ENPH, another short. So I did this. You can see the. I mean, you can see this repeat, repeat, repeat. Here's the institutions are selling. Institutions are selling. It compresses. I get a pop out of the box. I take it here. I'm in it for an hour for 20%. ENPH to the short side. Verizon 50% in an hour to the short side. See the compression? They're obviously selling it. I'm just looking for the proper entry. This is on a 5-minute chart. I wait for the breakdown below the VWAP. I take it there, and I'm out half an hour later for 50% profit. All right, this was a Tesla overnight. You can see how nicely this worked. It was bearish at the end of the day. We had yellow and red across the board. We take it here. It gapped down the next day from 120 to 112. That was a nice trade. But you know, that's a gap as a gift on these kind of things. Okay, so that covers the charts. It covers the SPY super system. Again, here are the strategies we use in the room. Straight calls and puts, which I said, if you're going to take straight calls and puts, use a 65, mostly a 70 to 75 delta. We do straddles and strangles, non-directional trade, debit spreads. This is the cut down the cost and the cut down the risk on the trade, but you're taking the long or short. We do time spreads over earnings. Won't have any more significant earnings coming out for a little time right now. So probably not till the first part of July. And weekly ATMs, which I haven't only but done one of these this year because the market does not allow for it. Credit spreads, I've done 2 or 3 of these this year. We did a credit spread, a call credit spread on ABBV last week, and we did really nice on that. We actually made 50% of our max profit overnight on that one. And then the SPY super system, which these are intraday trades that I identify in the room. I cannot post them. I can't post them. I can't alert on them, but I can tell you when the setup is there. And you'll be able to actually see the setup yourself. All right, so those are what we use in the room. Now I'm going to talk to you about what we've got here for Memorial Day. Now this is really a critical. This is something that you need to pay attention to because these discounts that are out here this weekend are pretty extraordinary. All right, and this is the Memorial Day weekend. Now this is a standard. You take a 2-week trial. You get the room, the trading room, and the alert service. You get the text alerts. You get all my trading videos, and you're free for 2 weeks, and then it rolls over quarterly to $396 on a quarter. Okay, that's for the free the 2-week free trial you can get, and it rolls over to the quarterly. You can cancel this anytime before the thing rolls over. But what I want to focus on here is the room itself, the option room and the alert service, the trading room and the alert service. It comes with an annual and a one-time payment. Annual is yearly, right? So it's $11.96 for the year. But what they've done here right now is they've reduced the one-time payment forever. So you'd be in the room and the alerts forever from $24.96 down to $19.96. And what you need to do is put in the $500 discount in the coupon code when you get out. When you log out today, you're going to use $500 discount. That's going to give you the room and the alert service forever for $19.96. And you saw what the profits we're making on this room. So that I think that's a pretty good deal. You're going to use a $500 discount. That's going to give you this one-time payment. If you just use the save 50, you'll get the yearly for $11.96. That's what you'll get for a year. But this is the one-time. This is the big difference right here. One-time payment, $19.96. All right, now I'm going to talk about the software. This is the SPY Super System software. This is a trade. This is the software that we showed on Thinkorswim. This is what identifies when institutions are in the trades and when they're not, right? And this typically is $14.98 a year, all right? And it was $13.96 normally for one time. Buy it forever. They've reduced it to $14.98 for this weekend only. So the yearly and the forever is one price. So if you pay $14.98 that you would have got to get the SPY Super System for a year, you're going to have it forever. You always have it. You can always get the updates to it. You get any updates we make to the scanners, any changes we make in the actual structure of the SPY Super System, you'll get that. $14.98 for forever. To me, this is a no-brainer. for the software. If you want the software, and I think everybody should have it, if you want to be knowing what the institution is doing, this is a very big deal here. Again, $500 discount. Now, in the chat box here today, Rory's put in the links for both all of these, for the 2-week trial, for the room, and for the Spy Super System. But these things are not going to be here long. This thing from Memorial Day, where you can get $19.96 forever for the room and the alert service, and $14.98 for the software forever. These are really good deals. I mean, I can't emphasize enough that this is something you should jump on, because you can use this whether you're in my room or not in my room. You can use this forever to help your trading, and it'll be a big help. You know, listen, I'm not a salesperson, and I'm not a professional presenter. I'm a trader. That's what I do. I do day trading and swing trading, but I do want to emphasize what a deal this is right here. All right, so take advantage of that. Again, so those are your options. The 2-week trial, which rolls over to $396, that gets you the room and the alert service. It also gets you my training modules, right? If you go with a room live, the live room and the alert service for a year, you get the alert service, you get the room, you also get a private Discord chat community with all of the folks from Rightline and all the people in my room that are also in the Discord chat, where you can chat with them. In my room, by the way, remember, I'm in there all day long. I'm posting trades, I'm answering questions. I answer questions all day long. People in the room who are basically full-time traders that also are in the room. They're posting trades they're seeing, and I take those and I put the charts up so you can see them, so you can see exactly what people are saying, and I'll critique those as to whether I think they're a good trade, a bad trade. A lot of times I'll take trades that come from folks in the room. So I'm in there all day long from market open to market close. I don't know any other room that you're going to have somebody in there that's talking to you and going over these trades, one trade at a time, all day long. And I go over all the strategies and why these trades are good trades and why they're not good trades. All right, so there's your really good deal on the room and the alert service, $11.96, $19.96 forever. Okay, and Spy Super System, $14.98 for a year, $14.98 forever. Basically, they knocked this thing down to $14.98 for this weekend only for the Spy Super System. I can't tell you what a deal that is. All right, so that pretty much covers the presentation. I hope you found it helpful. I hope the Heiken Ashi candles methodologies will help you in your trading. I hope to see you in the room on the alert service. And again, if you buy the software, you'll get installed. Rightline will take over your computer and they'll install it on your computer. It'll look exactly like mine. You don't have to pay, you don't have to trade on Thinkorswim. You can just download Thinkorswim platform and they'll load it right on there. It doesn't cost anything for the Thinkorswim platform. But so you can get the Thinkorswim platform. This will go right on here, and then you can trade wherever you want. I trade off of Tradier. A lot of people trade off of Thinkorswim. They trade off of Tastyworks. They trade off of Scott. They trade off of Fidelity. You can trade off of anything you want. Interactive brokers, doesn't make any difference. All right. So those are the deals, and these are really good deals for Memorial Day weekend. So I hope you take advantage of it. I look forward to seeing you in the room next week. I hope everybody has a great 3-day weekend. Remember, no market trading now until Tuesday. So we'll be at it Tuesday, hitting it again. And look forward to seeing you there. And again, don't forget the Spy Super System for anybody who likes to trade a lot, but wants to have some high probability trade setups that are very, very profitable. All right, everybody, have a great weekend. We'll see everybody back here on Tuesday. Enjoy your weekend.